Hello, parents. This is Brian Safdari and my friend Al Hoffman. Some of you have probably listened to our recent webinar we did on Saturday on the transition and the financial aid enhancements that we have with Al in the financial aid section, as he's the I call him the guy that pretty much knows the most when it comes down to financial aid rules, and is a great addition to our team. If you haven't met him, I wanted to introduce Al in a second. This workshop is for any family looking to obtain any type of loan when you accept your award package and you accept the school you're planning to go to, if you're a freshman starting for the fall of 2017, or if you're a family of ours that are renewing and you want to know how to obtain the loans again. Maybe you forgot from last year or a couple years you've been doing it and you just want a quick tutorial on how to get the loans and what are the steps. So this workshop applies to any family that is renewing with us and is planning to do loans again, and any new families that are in our program going into college for the first time in the fall of 2017. So I have Al Hoffman here. Al, welcome.
Well, thank you for having me, Brian. This is a great topic, as loans are pretty much in everybody's portfolio for the college process. You bet.
Great, thanks. Thanks for being on the call. So let's dive in. So I put a PowerPoint together. Al and I are going to go back and forth on this PowerPoint and give you some tips and strategies and walk you through this to make it really easy to follow. That way you can be able to get the loans. So first off, let's go through the financial aid timeline, just to kind of give you a timeline. October 1st to March 2nd, you have FAFSA submissions, which we've already done for you. They have already been completed. We continuously update the FAFSAs. Once you, with this year, we already had everything done because of the PPY system. Since 2015 taxes were already done between October and March, we already did the FAFSA and the DRT for you, so that was already done. And then between March and April, which is now, you should be receiving all your acceptance, declines, wait list, all that stuff is happening now. And then between March and May, financial aid awards arrive. Typically, once you get an acceptance, then you will receive a financial aid package. So you want to make sure you look at the portals at your college and ensure that you have the awards and the acceptances, and you double check to make sure you got the maximum award. If you haven't watched the workshop that we just did it was a great workshop Al and I did on Saturday on strategies on how to read your awards and how to appeal. So if you haven't watched that, please go back. We sent you a link to watch that. Make sure you watch it so that way you know you got the highest award, and let's say your appeal is done and we take care of the appeal and the awards. By May 1st is National Commit Day. You have to decide what school your child's going to go to, or if you're getting an award and you're just renewing your award, same thing. Once you get the awards, you want to go ahead and update and accept everything if you're a renewing family. And then between May and August, you want to apply for loans. And typically you start applying for the federal loans and all the different loans that we're going to talk about here. So we'll walk you through it here. So May 1st to August, we're going to do loans. So this topic, it starts from what you do now after you commit to a school and how do you meet the funding requirements. Now, before I go into the strategies, or before we go into the loan options, if you are a parent and we have designed them, if I've helped you put a college funding plan, a more strategic funding plan where we sheltered assets and we have a strategic college funding plan, you know if you have it because you have a Excel spreadsheet and vehicles that we use to fund college based on your situation. So you have a funding plan. You can look at your college funding schedule. It'll show which loans I recommended and how much we're going to need to borrow. So as you borrow these loans, it's really important that you let me know how much student loans you got and how much federal loans you borrowed, so I can update your college funding schedule on a year-to-year basis. And if you have a funding plan with me, the person you want to contact would be Katie, who's my funding assistant that helps with your college funding plans. So with that being said, let's dive into the next section. Al, you want to cover this?
Surely. So the loans that you'll see on your award letters, and they will have different names, but the one that's common now is the direct subsidized loan. Some colleges are still using the word Stafford loan, but the direct is the word of the day now as the government took over the loan system a number of years back. There are subsidized loans, which means that the government is paying the interest while your child is in college. There are unsubsidized loans, which means that the government is not paying the interest. And the PLUS loan is the Parent Loan Undergraduate Studies, undergraduate student, PLUS. So the direct subsidized and unsubsidized are a student loan in the student's name, and the PLUS loan is a parent loan. And then there's consolidation loans at the end, because every year is taken individually. So your freshman year, you'll have a set of loan documents, sophomore, junior, senior, hopefully not, but maybe a fifth year. And then at the end, when the job is done, to get one payment, you will get into a consolidation loan. The master place to do all of this is studentloans.gov. You don't have to worry about different places. It is all just one place. It's all right there. The studentloans.gov is a little bit different for the student loan and the parent loan. You have to identify yourself as the student or the parent. But the student loan requires a little bit of a counseling session to make sure that you understand this is a loan, and the parent loan doesn't have that counseling session. The student loan also gives a breakdown of the cost, in other words, how much you're going to pay. The parent loan doesn't do that. So a little bit of inconsistencies there, but the student loan is the major one that they want to make sure the students know what they're doing. And I think studentloans.gov is going to be your namesake. By the way, in the earlier slide, Brian rightfully said May to August, but most invoices are going to come at you around July. You surely don't want to start this process as late as August. Some people do, but it would be my strong recommendation to start in May. Get this done. May is loan month. Okay, next slide there. Brian, there we go.
Yeah, 1 second. My mouse
locked up.
Yeah, there we go. So the types of direct loans here, we have the direct Stafford loans that Al just talked about. It's offered with the FAFSA submission, which we've already done for you. It's offered to undergraduate students that show a need. And there are obviously unsubsidized, which we'll talk about. This is a subsidized one. This is the first one where it's interest-free, like Al mentioned. And then interest on the loan is paid by the government while the student is in school. So the student gets that. It's their own loan. They borrow it. You can help pay it back at the end if you'd like, or that's my philosophy. That's their skin in the game and their responsibility to have some ownership for their education. In general, with any of these loans, one thing I usually tell parents is that it gives them skin in the game. It helps them build their credit history. It's a loan in their name. When they graduate and they get a job, and if they're paying that back based off if they're under a certain income bracket, from a tax planning standpoint, they can write off a certain percentage of the interest when they're paying it back. So there's other benefits. And then in general, students are going to live longer than the parents typically, and they have that time period to take that ownership on their education and have some loans. But these are the good loans that are low in interest and that we recommend part of financial aid. So the second one is the unsubsidized direct loans offered usually without a credit check. Same thing, they don't check credit for the student. It's offered undergrad and graduate school offers these loans as well. And then the rate is fixed upon the year you borrow, meaning when you borrow this year, if it's 3.6 and it stays at 3.6 for the life of the loan, next year if the Treasury bond, if the Treasury goes up by 0.5% and it's like 4.1, then it's 4.1 fixed on that portion of the loan for that year until the life of the loan. So it's fixed upon the year you borrow, and then interest begins when the loan is dispersed. So next, I'll have Al cover this part.
The PLUS loans, in the same fashion that 10-year Treasury note comes out, it goes up or down depending on the economy, et cetera, and all those features of the government, and then that new loan rate comes out. For instance, the PLUS loan current rate is at 6.31, and in the previous years that was 7.27. So these things go up and down, but when you get the loan, then it's fixed. So it's going to be for the life of the loan. These different numbers, then, 7.2, 6.1, or 6.3, or whatever. When you do the consolidation, that's when they have a formula that adds all those up that comes up with an average interest rate. These are used by parents, many parents, to cover their EFC or to cover the unmet need or the gap in funding that some colleges offer when they give their awards. They are credit-based, but it's a pretty lax credit system. I mean, you really have to be down there if you're not going to get it. But you can be over, you can borrow too much, and then they will finally say no. But it's down there quite a ways. It's in the 500s, Brian, before they'll take it away from you. The interest begins when the loan is dispersed. Now, on the PLUS loan, you have two disbursements, one in September and one in January, first, second semester. So the way the PLUS loan works is 60 days after second disbursement. So then 60 days after January, March. So for most parents, your PLUS loan payments will start in March of the freshman year. Okay? Go ahead there, Brian.
All right. So now we have the direct consolidation loans. These are just a federal loan by the U.S. Department of Education and allows you to combine one or more federal student loans into a, one new loan. So typically we don't deal with consolidation. I don't know if you do a lot of this right away, Al.
No, it's pretty easy, really. Again, studentloans.gov, there's a button there. You hit for the consolidation, and it walks you right through it. It's actually pretty user-friendly in the work that they've done on the studentloans.gov.
Yep, perfect. And then student loans, we'll go over some of the limits here. So when a student borrows, obviously there's a limit, and we just wanted to point out those limits. I think I have a slide. I'll double check somewhere here. And then the master promissory note obviously is what, these are some of the requirements that they're prompts.
Now
basically.
This is a loan that goes up every year, so that master promissory note needs to be signed 4 years in a row, or every year that you're in college that you're using the system. Yep.
Good point. Yeah, we get students and parents asking us that, and I'm glad you brought that up. I did this last year. Do I need to do it every year? And I say yes. That's why we do the FAFSAs every year. That's why we have to we submit every year. That's why families renew every year with us, because once the hard work is done, the annual renewal fees are fairly really low compared to what investment they made when they were first in our program when they joined. So that's why this covers everything that we do for you. So part of why families, we just talked about, I sent out a video on the renewal. Parents are asking for help, and that's what you get. You get that peace of mind and knowing that there's someone there to help you. And the cool thing now is with Al, we have Al now on our team that has been very successful for over 20 years doing financial aid planning and helping in this college space, especially in the financial aid space. So you now get Al to address and help you with any of these things that you have questions on going forward. So that's why you're hearing more of Al instead of Sheree, because as you guys all know, Sheree is still on medical leave and we have no answer on when she's coming back. So we have the loan limits. Go ahead, Al, were you going to say something?
Yeah, the loan limits, if you have a slide on it, fine. If you don't, that's fine. The loan limits are, yeah, there's a max you could get, and this surprises some people. There are some people that come into the process thinking that I can borrow all that I need from the federal government, and that's not true. The max that you can get as a freshman is $5,500. That's it. And then the sophomore, it's $6,500, and in the junior and senior year, respectively, $7,500 each. Now, there's a bit of a complication here in that if you are a family of need and you have demonstrated need, then of that 5,500, 3,500 is going to be unsubsidized, and the other 2,000 is going to be, 3,500 is going to be subsidized, and the 2,000 is going to be unsubsidized. So you're going to have two pieces to that loan, one where the interest accrues immediately and one where the interest is being paid for by the Department of Education. That goes all the way through that 2,000 sophomore, 2,000 junior, 2,000 senior. So there's 8,000 of loan that's going to be unsubsidized if you take the full amounts. There is an aggregate limit of 31,500. So somebody really quick on their numbers, if you add the 55, 65, 75, and 75, that's $27,000. So there is a little bit of a give me room there on a fifth-year person that you can borrow some additional Stafford loan money for that fifth year. But past that, the limit is $31,500. That's the max you can borrow at the bachelor's level. The levels go up for graduate work substantially, but they're up and pretty much between the Stafford loan, and then they retitle the plus loan into the grad plus loan, and that is unlimited. So a student, when they go to the graduate level, can borrow anything and everything. But be careful. Okay. All right.
Yeah, and also to add to that, yeah, you got to be careful with those grad loans. But parents ask for undergrad, and we get parents who continue their services with us for postgrad because they want guidance on our counselors helping make those final decisions which school they should go for grad school. So we might get parents wanting help there, but mostly they want us to continue doing the FAFSAs for the child. But the student is considered an independent student now once they have their bachelor's degree. So that means that for undergrad, that's why, especially in California, $27,000 over 4 years is not enough, which is why we have to supplement the difference between the different ways of funding college that I have shared with you guys, which would be like paying cash the difference or borrowing private loans, which we want to stay away from private loans. We know college is a business, and they got in trouble back in 2008 on getting secret kickbacks and rebates and all kinds of stuff that General Attorney Cuomo investigated. So there's a lot of stuff that went on back then that there's more scrutiny now. But you want to try to be careful with the Discover loans and the private loans and all of that. So we have that. People borrow home equity loans. They use their retirement loans, their money. So there's a bunch of different ways to fund college. But for undergrad, that's why parents have to step in and help to cover the gap in funding and looking at loan options. And that's where the plus loans come in, which we'll talk a little bit about as well. So I do have those in the slides as well.
Okay. Yeah, let's go on to that next one there. But I think I have some kind of some guidelines, if you will. So if you're trying to say, because the studentloans.gov will tell you this, but as a pretty much a rule of thumb, you're looking at about $10 per thousand per month for 10 years on a Stafford loan. $10 per thousand per month. All right, so just keep that in mind, $10 per thousand per month. Okay, and a plus loan is up to around just shy of $14 per thousand per month. That's the part I want you to keep in mind, because they won't tell you that on student loans. They don't give you that what the loan is costing you like they do, like a bank or a mortgage broker does when they say, if you borrow this, you're going to pay this back. They do that for the Stafford loan, but they don't do that for the plus loan. So keep that in mind, about $14 per thousand borrowed per month for 10 years. Okay, so those two things, keep that in mind as you're trying to sit there and say, now, usually there is also, and it's really not a loan, well, it is a loan, but it's a no-interest loan. At freshman orientation, am I getting ahead of myself here, Brian? Do you have a slide on AES, pay-as-you-go?
I don't have anything on AES, no.
Okay. So on your freshman orientation, there is a pay-as-you-go system. I mean, obviously, you could pay the whole year. Let's say that your part for the college's invoice was $20,000. You pay the whole $20,000. you can pay it in 2 payments of $10,000 per semester, or they'll give you a monthly payment plan. They'll charge an entrance fee, and it's really an insurance policy what it is. It's an interest fee. A broker does this for the college, and they'll charge, say, $55 to manage the loan, to administer the loan. And the loan is for $20,000, and it starts in 10 payments starting in June, 9 payments if you start in July, and 8 payments if you start in August. And this is a pay-as-you-go system. Now, I would say that you should always pay as much as you can as you go, and borrow the plus loan for whatever part you cannot cash flow. So the AES system, every college has it. You just have to ask for it. What's your monthly payment plan? And they'll give you the paperwork for this at the freshman orientation meeting. And you can set that up. Again, if you start early enough, it's June, 10 months of payments, and July, 9 months, and August, 8 months of payments. And then your plus loan could be taken out for the rest of what you cannot afford to cash flow through your AES payment system. Anything to add to that, Brian? That's
No. Yeah, the only thing I add to funding is remember, parents, where if we're trying to get need, and we talked about not showing the school, we can just write a check, especially if you have high assets, low income, or we're in a need-based and you make $40,000, $50,000 a year, or whatever we discuss on our funding strategy, and we're getting free money, and all of a sudden you write a check directly to the school, that could affect us for financial aid the following year, which we want to be careful with. So kind of take that info from what Al talked about. He has some good points there, but also make sure some of the things that specifically we talked about in your funding plan, where we don't want to get that confused there either. So cool. So master promissory note, obviously that's, Al already hit on that, is once you go on studentloans.gov and you apply and do the loan counseling session online, the student counseling session, you'll do the MPN, say I promise to pay this loan back. Basically, you'll follow the prompts, and then that'll allow the system to sign off the conditions that the studentloans.gov website had in order for them to then disperse the funds. So at the end of this call, we'll talk about the logistics. So I'll leave that to the end, meaning parents do ask, okay, so once we do this, what happens next? Do we get the money and then we have to pay school, et cetera? So I'm going to cover that towards the end. Anything else you want to add, Al, to master promissory note?
Yeah, this is a digital system. So studentloans.gov, it's all a digital system. There's no paperwork anymore, which means that you will have to know your FAFSA, FSA, not your FAFSA, your FSA, Federal Student Aid, ID, and password. That's how you're going to sign that master promissory note. So you'll have to have that. Now, it's kind of morbid, but I think we should cover this just for the sake of knowledge, okay? In my family, I am the person who has the biggest health risks of passing away before my wife. So I took out the plus loans, not my wife. It's going to be one of the other of the parents. It's not going to be both. So I had to create an FSA ID because the FAFSA was signed by my wife when we were in this process, and the loans I wanted to do, and I had to have an FSA ID to do that. So I had to create an FSA ID and password, and then I signed it. And then if I pass away before the loan is done, the loan is forgiven. My wife does not inherit it. My daughters do not inherit it. So kind of morbid, but just a point of reference. The only thing I can add to that, kind of a tough topic. But go with that person, that parent who has the genetically, I guess, the opportunity to pass on to the next chapter in life. Okay. All right. I can't hear you, Brian. Did I lose you?
Oh, you there? Sorry.
Yep. Yep.
Yeah. So I was saying that. Yeah, we had to. Those are good points because we had 2 parents last year pass away, and the federal direct loans were automatically forgiven.
Yep.
Yeah.
It happened.
So we've seen that happen. We also had another scenario where parent went on a specific type of disability, and they petitioned and they did some stuff that forgave the loans, and their loans were forgiven. So there's all kinds of different loan forgivenesses when you borrow from the federal level, which is why I like student loans and Parent Plus loans over private loans, because they do have a lot of federal protection and things like that. So you want to be very careful with those radio commercials you hear all the time, consolidate your student loans and all that. So just be very careful with those, because they take federal loans and they consolidate them into an adjustable lower rate, and it looks like you're paying lower, but you're opting out of federal government loans and going into variable and private bank loans. So you want to be very careful with those type of commercials that you've been hearing a lot on radio lately. So we covered master promissory note. Let's go into entrance loans. I don't know why the PowerPoint did that. It was weird. It pulled it into blocks. But entrance loan counseling, obviously it's electronic as well, just like the master promissory note. When you log in, I'm going to show you what it looks like to log in a second, so you can visually see all of this. You do the entrance counseling session. You do the disbursement of loans is the next step that happens. The loans get dispersed. There's requirements and interest and origination fees to keep in mind with these loans. So these are just some of the things that you can read about when you're on the studentloans.gov website. They have these things there for you to read if you wanted to read and get into the minutia of how the disbursements are done and all that. Anything you want to add, Al, on any of these categories?
No, this is, again, the Department of Education's websites are actually, as websites go, they're actually, studentloans.gov is pretty good, pretty user-friendly and pretty easy to see. Yep. They got some nice stick diagram presentations, YouTube style, only short 3 to 4 minute type things, and some of those would actually be worth your while to watch a couple of those as well.
Cool. Perfect. Next, here are the loan limits that Al talked about, just so you can kind of visually see it. Freshman year, $5,500 up to $3,500 and subsidized, and then $2,000 unsubsidized. Sophomore year, $6,500. As you can tell, the subsidized goes up by $1,000, and then it caps out at $7,500 in the junior and senior year. And again, if a student goes into school a fifth year and has to go a fifth year, then you get an extra $7,500, which gives you the aggregate total of $31,500 for undergrad students. Next, we talked about the master promissory note. It's a legal document that's done electronic. Basically says you promise to pay it back. And it also explains the terms and conditions of the loan. You can borrow additional direct loans on a single MPN for up to 10 years. These are a little detailed. Don't know if we need to really spend too much time on this stuff, but basically it just means that
when you're with us the following years, those questions, if they come up when you're with us the following years, of course, those answers come. Because that's part and parcel of a renewal is to answer questions that come up. But since the college is a 4-year process, you really could just consume it 1 year at a time. So there's some things here that, let's not spend too much time, Brian, on it, as I'm sure that people will want to stick around.
Yeah. So there's the site again, studentloans.gov. Just basically everything goes through studentloans.gov. We're just being a little thorough. Just don't get confused or overwhelmed. It's not that difficult. It's pretty simple when you follow the prompts online. And then you can always go back and watch this recording and listen to it anywhere you get stuck or you have questions on. We have it here on the PowerPoint, so you can go back and watch it. We talked about entrance counseling. All students borrowing subsidized loans need to complete them. If you don't complete this, even though we see families say, well, we accepted on the portal. We went on the portal and accepted the Stafford loans, and we did all that. Are we done? I say no. Just because you go online and you accept online on the portal that says accept the free money, accept the Stafford loans and all that, a lot of times parents go, okay, I'm done. Now the money goes to the school. You still have to go into studentloans.gov. you must go in there and do the prompts and log in as the student separate with their FSA ID and password and follow the prompts to do this Stafford loan and the subsidized, unsubsidized, and go through the 3 prompts that they're going to give you. Just follow the prompts. They're pretty simple, but these have to be done in order to sign off on the conditions on these loans so that the loan can get dispersed to the school. So we'll cover the logistics at the end. And then the goal, obviously, for this is that the student understands the rights and responsibilities for the loan and how the loans work. So that's pretty straightforward. Disbursements. This just talks about disbursements. Payments of the federal student loans are funded to the school. So the money goes to the school, and it gets taken out per semester or tri-semester, depending on if you're at this UC system or whatever semester system that the schools are on. The money gets dispersed into whatever way appropriate. And keep in mind, disbursements do not take in place in summer terms. So we get parents, they start fall, and then in the summer they ran out of money, and they call me and they're like, Brian, we need another $2,500 that we're short for summer school. Summer school counts for the year prior's financial aid program. So the way the semester goes, it's fall, winter, spring, summer. So you have to remember that part of financial aid, everything they do, summer's not included in their financial aid package. So sometimes I've seen schools where you can go to the school and say, at the beginning you're going to be doing summer school, so they can go back in and change the cost of attendance and increase it by $2,000, $3,000. And when they do that, that's part of the appeal, because then what it does is whatever free money you get, the difference, there's an extra $2,500 added to the cost of attendance so that you get extra money to cover summer school if you're planning to do summer school. So that's really important if you are a summer school student and you know for sure in the curriculum you are doing summer school. So just a note on that. Let's see, we got disbursements, we got contact the financial aid office for the disbursement schedule. So once the money goes to the school and the disbursements go in, you have to follow up. Once you do this, the loan stuff on studentloans.gov and you follow the prompts, your status from that point is you got to call the school, not us. So we get parents calling us saying, hey, Brian, I did the Stafford loans and the Parent Plus loans, and on the portal it doesn't look like on the accounting that the money has been dispersed. And my answer right away is you either go on the portal. In the portal, if it's live, it'll show you if it's been done. If they're backed up and they haven't, you would call the school and find out when the disbursements will show up on your financial aid portal or on your billing online, or however way they want you to communicate that.
This actually has a high chance of happening to you parents, as
yeah.
In years past, the loan process would take anywhere from 2 to 6 weeks. Right now, the studentloans.gov, and again, it's digital. It moves quite quickly. So disbursement of funds, the colleges usually are a catch-up game. Brian's advice there is well taken to let the colleges know when you did your loan, and so that they can verbally, if they know that you have done the process, you have signed the master promissory note, then that is going to be all you need to make sure you don't have a red flag on your account, that you can start classes.
Cool. Requirements: must be enrolled or accepted for enrollment as a regular student in an eligible degree or certification to get these loans. Must be enrolled at least half-time to be eligible. Keep in mind, if you're half-time, you get half the funds. Pretty straightforward. If you're full-time, you get up to the full amount. And must maintain satisfactory academic progress in college. That applies to some degree, but we don't need to really go in detail there. And then,
well, I just want to mention one thing. If you're taking some courses, you're just taking some courses. I'm going to be silly here, but you're taking basket weaving and whatever, just for continuing education for yourself. That's not career. That's not a career. That's not a certification. That's not an eligible degree. So keep in mind, these loans are for a degree program or certificate program, not just to take some courses along the way.
Perfect. Good point. All right, next we have interest and originations. This just talks about how subsidized and unsubsidized loans. This might be, so this, we didn't update this part. These are last year's rates.
No, actually, that hasn't, the points hasn't changed. Oh, that right, current fixed interest. No, that's not right. This year we are at
4.1, I think.
Yes. This year we are at Stafford loan is 3.81 and plus loan is 6.31. So 3.81. So there's, again, that's a good example. Kind of glad this mistake happened, because that, again, this loan is a fixed interest rate, but it was variable upon inception. That's where that 10-year Treasury note thing clicks in every year and sets the rate for that year. And 4.27 was the previous one, and 3.81 was this one. However, I'm not going to make any estimates, but I will tell you it's going back up again this year from 3.81, probably back up to that 4.27 mark for this year's 17-18 school year. The 10-year Treasury note has gone almost a point from this time last year, almost 1 full point. So it'll be back up to this rate. This is it may be wrong, but it's probably going to be right for the 17-18 school year, Brian. So.
Yeah, I agree. I saw something like that too.
And the origination fee is only a point there, 1.068, but I'll tell you, the plus loan is close to 4 points. But still a good loan. Still a good loan for as loans go.
I agree. Cool. So we'll move on to this. Again, these are just limits that will change each year, and we'll monitor and help you each year. Then repayment, students are automatically placed in deferment after disbursement. Repayments begin 6 months after graduation. Taking a leave of absence or falling below half time. So, and then you could always defer it again. We've had instances where you could go back and defer it, but the point is just know repayment starts 6 months after graduation. Typically, that's the first event that happens for most of my students. And avoid capitalization, meaning increase the principal on the total amount on the loans, as a result not paying the interest on the loans during deferment grace period. So I like to pay the interest if you can. It helps to pay, like Al already mentioned, pay as much as you can if you can. Pay the interest at least, and those are things on an individual basis. We probably have a plan and a game plan for you anyways for the most part. But if you're kind of like solo doing this, trying to figure out what to do, these are just some general rules of thumb to help you towards administering these loans.
It's not necessary here to go into the vast array of different options for consolidation or payment reduction. There's all kinds of programs out there. There are consolidation programs, there's extension programs, there's income-based repayment programs. But and this is something that Brian and I have already talked about. We'll do some kind of a presentation for you graduate students, not graduate, the students that are graduating this year, as this is important to know about how you can reduce your payment structure on these loans.
Yeah. Yeah, I'll make a note of that. You and I had that on one of the topics, so we'll definitely do another recording for that.
Yep.
So here we are. Stafford loans are done. We get the max. You follow the steps. Now you do the same process to basically borrow like the piggyback loan to the Stafford once the Stafford loan has been maxed out to the student, and we call that parent plus loan. We call that federal direct loan, whatever you want to call it. It's the federal government loan. That's basically for the parent. The parent has to qualify in order to get it. Credit check and endorsement alternatives. Basically, they do check credit, but they're not as, they're pretty lax with the credit. So pretty similar what we discussed. If you run into something like this here and you don't get approved, maybe you have a current bankruptcy in the process that is pending, maybe you have a federal tax lien you haven't paid, usually those will disqualify you. And we've had that happen. Unfortunately, good things do happen, or bad things do happen to good people, and it's just circumstances, and we've seen that happen with families in our program. And that's part of the renewal, the things that we discuss. When those things do change, we'll have solutions and plans for you, things that are outside your control. So when that happens, just let us know. If you get the flag where you didn't approve and they want you to do an endorser, that's the endorser right here. Endorser means you're going to get someone else to co-sign, basically, that is usually an aunt, uncle, relative, someone that is willing to co-sign for you to get that loan. And we had to do that a few times last year because people had issues and concerns, and they ended up getting an endorser, and they were able to get the loan. So. And then,
yeah, just real quick on that. That Stafford loan, that's an entitlement of sorts. Remember, Brian said no credit check. But the PLUS loan is not an entitlement. You do have to go through the master promissory note again, but now you are going to be checked out. However, the credit limit is pretty lenient. Go ahead,
yep.
Brian.
And then same thing, loan counseling. You're going to do the loan entrance and the master promissory note. So once you log in to studentloans.gov with your FSA ID and password, then it's going to prompt you to follow the few steps to do the master promissory note, do the loan session, and there's like an application you go through filling it out page by page, and it's 5 or 6 prompts, pretty simple to follow. And you do the requirements online there. You'll get to see the limits and interest and loan charges, same thing that we discussed. You get to see the disbursements. There's lenders that come in play for that. And then, there are some tax benefits. So tax benefits, you want to consult with your CPA on this or your accountant, but you get up to $2,500 of the interest written off if you're under a certain income bracket. I don't want to mention the income bracket on the call here because it changes all the time. So I don't want to I don't want to give a specific amount. I have a tax background. I do a lot of tax and financial strategies for a lot of our clients. So if you have sat down with me, I've probably gone over those with you. But ask your CPA on this. They'll pull up the current code and how much the tax benefits are, because they can change each year. So anything else you want to add on this, Al?
No, the previous lenders, there's really just one lender, that's the studentloans.gov, but the previous lenders are using their facilities to help administer all of these loans. So you'll still hear names like Sally Mae, and you'll say, well, they're still a loan business. No, they're not. They're administrators of the government's loans. So it's kind of a vague area. It looks like there's actual numbers of lenders. There really isn't. Studentloans.gov is the only, that's it. Everybody goes through there. We have some of these other people administering them, but that's still the government's loan.
Yep. Perfect. And then same thing, must be the parent, just some general requirements, same rules that we discussed for Stafford loans. And obviously you can have adverse, so I guess it's not like you can't have adverse credit history. You can, because they're pretty lenient, but they do look at certain things that may disqualify you. And again, that falls under endorsement. If that happens, let us know. We'll help you. But basically, you'll follow the prompt with the endorser, find someone else, and it'll take care of it. But if you have any questions on all this, feel free to call our office. And at some point, we're going to be sending out an email and a video with the transition with how Al is now plugged into our office and our system and our program. So nothing really has changed. The only thing that's changed is you get more knowledge and more guidance now when it comes down to financial aid, whereas before you had only Sheree, that's who you guys knew to contact when there was some kind of financial aid question.
You know, I got to tell you that, look, it's kind of funny, but it's just as a point, because I always get asked this. Parent loan undergraduate studies, okay, but then somebody always asks me every year, actually a lot of people ask me every year, grandparents, No, it's not a G-P-L-U-S. It has to be the biological parents or the adoptive parents, and not the grandparents. Okay.
Cool. Yeah, good point. And cannot be in default or any prior student loans or parent plus loans, so you obviously can't have a default. So some of these are pretty self-explanatory.
Mm-hmm.
This is just a little bit more on endorsement, what is considered adverse credit. It could be a bankruptcy, could affect it. Now, these are just some of the rules, by the way, we pulled from studentloans.gov. I do want to preface on this, though. Even though I'm giving you some specific stuff here, these do not always apply. Most of the time they don't, because I've had families that they were reading the online rules that, hey, Brian, can we still do this? Because it clearly says past 5 years, it won't affect it. And we had a family a year out of bankruptcy, 2 years, it didn't affect it. We've had families that have had tax liens and they were in repayment and they were able to still get the loans. So it's never a cookie cutter approach, even though you're reading some of these things that I pulled from studentloans.gov. So I don't want to get so specific here. Each case, each family is going to be different in this situation. So I do want to just preface that so we don't get so into this minutia. Voluntary surrender, obviously, repossession in the last 5 years, foreclosure proceedings, delinquency in the current 90 days, something recent happening, collections, charge-offs, wage garnishments, default on loans, lease contracts terminations, state, federal tax liens, etc. Again, don't take this as specifics, but these are things that may affect their decision on qualifying you direct, and they would want an endorsed alternative. Anything else, Al, on this?
No, that's pretty clear. Yep.
Okay. And a little bit more gets detailed on this. Someone who does not have an adverse credit, pretty clear who you want to get if something happens to you from a credit standpoint. And then you can submit documentation on an appeal showing that the information causing the adverse was incorrect. So if you feel that, basically they're telling you, if you feel that alternative endorsement that they're asking, you don't think you have credit issues and it's an error, maybe it's identity theft. We had a client that had identity theft and they had a lot of credit issues, but it was identity theft. We helped them appeal with studentloans.gov, and they came back and changed their decision. So those are special circumstances. So if you have a special circumstance, you basically appeal the same way we talked about the appeal process at the college. You do the same thing with studentloans.gov. If this happens, you call studentloans.gov directly, work with them directly. We have no control over this. We can't change the decision. We can't do anything here. We can only guide you into the right direction, and we would basically tell you call studentloans.gov. So that'll save you time. Instead of calling us to try to figure what to do, you call studentloans.gov.
Agreed.
And then, yep, so endorsement requirements, same thing, FSA ID, endorsement addendum, which is online under studentloans.gov. It's just an extended version of endorsement alternatives.
Just a small note here, if you've been with Brian a couple of years, this FSA ID is only good for 18 months. So if you're in this process and you're doing things, you say, well, it's time to do the loans again, a master promissory note, and then you can't sign it, then they'll prompt you. I mean, that's, again, the website is very good here. But they'll prompt you, but you may have a snag there in that you have to go renew your FSA ID for another 18 months. Okay.
Master promissory note, same thing, just a copy and paste from the Stafford loan section. So you still have to do it no matter what. So basically, make sure you do the master promissory note, the counseling session, and follow the prompts. Pretty simple. Loan counseling session, it's telling you that you understand your loan, you know how to manage the loans, you plan to repay it, avoid default, and make finances a priority. Limits, interest rates, and originations. Again, these have changed. Some of them have changed. I'm not going to spend too much time. The only thing I'll say on this is just know your limits, know the interest rates, and the origination. When you do the studentloans.gov, you get a disclosure there. It shows you. So I'm just letting you know. Make sure you just know the limits and all of that. So I don't want to spend too much time here because these numbers each year change, but you can go online and check the current rates. Anything else on here, Al?
No, this you're right. This is again studentloans.gov. It's almost like a mantra. We must have said it 30 times, but it
yeah.
is the place to go.
I'll bypass the disbursements. We already talked about this. So let's see here. Let me see if there's anything here we didn't talk about. Again, disbursements go directly to the school, and the school covers all your fees towards tuition. So it covers the fees towards room and board, transportation, tuition, fees, room and board. Basically, direct expenses, anything that's considered a direct expense will be taken out from your grants, the free money, the student loans, the work study. Whatever you get will go towards your total cost of attendance, towards the direct expenses. And then you'll have indirect expenses like books and personal expenses, etc. You might have $3,000, $4,000 of indirect expense or maybe more. Whatever that indirect expenses, if you have money that funded the entire gap, you're going to get a check back at the end. So the only thing I want to talk about here on the disbursements is once the school collects what they need, whatever money's left over, you get a check back. So when you do the studentloans.gov website, when you go through the Parent Plus loan application, there's a section that asks, do you want the overage funds? Do you want those funds to go to the student, or do you want those funds to go to the parent? So hopefully parents are going to choose to come to you and not the student. You don't want them to take it and go blow it or spend it. So just make sure that whatever overage, it comes back to you, and you use that throughout the year for whatever other miscellaneous indirect expenses you're going to have throughout the year.
Amen.
And then if there's any funds remaining, again, we talked about that, so that was what I just covered. Repayment starts 6 months, begins 6 months after student graduates, same thing. And then there are forbearances and rules and all of that stuff that we just talked about earlier.
And it's a whole other presentation, at least a good hour, because those programs are good, but they're a little bit difficult to explain.
Yeah, forbearances don't really apply to you now, but again, Al and I will have a separate. There's so many different ones, so we'll want to spend a different time to cover that. All right. Lenders are chosen by the Department of Education. You don't have to do anything. You'll be notified of the lender, and you'll get an email from them. And again, whenever you want to get any info, if you're not getting any emails or anything, again, just go to studentloans.gov. That's where your account is. That's like your online account. That's where you check status of everything. Tax benefits. These are some of the tax benefits. American Opportunity Tax Credit, Lifetime Learning Credit, Hope Credit. There's different ones. I just wanted to point out a few of them. But again, please make sure for any of these, see your accountant. So see your account for additional tax credits. Sorry, this is please see your accountant for additional tax credits and details. And then any question and answers, you can send an email to support@collegeplanningexperts.com. And at some point, we'll give you instructions where these questions, actually, we're going to streamline this. We're working really hard the past couple weeks, sleepless nights, I would say, for the past couple weeks, especially couple months, and probably over the past 4 or 5 months with Al and the obviously the news that we were given with Sheree, with things that happened, and we had to quickly make decisions and figure out what to do. And I'm really happy with the decision we made, and I think this is going to be a great partnership here with Al. So at some point we'll have some simple instructions on email, and the staff will continue letting you know just the process when you have any kind of financial aid questions, loan questions, appeals, anything related to financial aid, anything that falls under financial aid, basically will go to Al Hoffman. Anything related to student planning, if you're in the live college planning programs with us, that would be Irene or one of our in-house counselors. If you're going to be going into one of our virtual college planning programs that some of you don't even know about yet, that you might bring in other future kids in our program, you'll have other options where we have an online counselor, a phenomenal team of counselors that understand student positioning and getting kids in, similar to what Irene does, but it was designed for our families that are not local, that you can take advantage of those. There'll be another email and another contact. But under your portal in Ingus, when you log into Ingus, in the first page of your Ingus, right when you log in, you'll see a quick glance of who do you contact for student planning questions, who do you contact for financial aid, and no matter what program you're in, when it comes down to financial aid, advanced strategies, income and asset planning, and funding planning, those are always me. I'm the main person here still till today handling all the fundings for now. So that's that. Al, any other things you want to add before we close this session?
No, I think this was a good meeting, and there's almost too much information. I realize parents, if you're a little bit overwhelmed, but understand that this was an overview, and it is a video, so you can replay it, check back, and of course you always have the ability to email questions. So don't press on things. If you have a question, please use your resources. That's what we're here for. That's what you paid for. Okay.
Yeah, so just you can kind of see I just pulled up the studentloans.gov site. You go to studentloans.gov. Here's the main page, and then you click login here, and you're going to put your FSA ID password. So if the student is doing the Stafford loan first, you're doing the student portion, student ID password, and then follow the prompts. I don't have one to log in, so I'm not going to do that. And then once you finish the student part to do the Stafford loans and you walk through the prompts to get the Stafford loans taken care of, then you log back out, and then you go right back in, same thing. You do the same thing here, but you just do it double. You click login again, but this time you put parent's ID and password, and now you log in, and it identifies when the student logs in or the parent. So when the parent logs in, it prompts you to do the Parent Plus loans. When the student logs in, it directs you to do the Stafford loans, and then you go through it, and that's it.
Yeah, parents, I know you may be compelled to help your student with this. I would say this is one of those first steps you might want to make sure they do it themselves. You can assist if you wish, but don't do the student loan for them. Really think they need to go through this process. That's a personal opinion, but I do believe it has it's good advice. Okay.
I agree to that. So definitely have the students do that. Cool. So that pretty much covers how to obtain loans. And again, if you have any questions, feel free to contact my office. And again, you'll have eventually Al's contact and his info, so that way you can actually go directly to Al for all of these questions, and you'll get a much quicker answer, and you'll get our financial aid response is going to pick up. It has been pretty slow the past couple weeks or couple months, and all of you, I appreciate the patience. As you know, we lost a full-time person, but we have Al back up, and we're very close to finishing everything and having Al basically plugged in to take over. Cool.
Okay.
All right, Al, thanks so much.
Welcome, parents.
I appreciate the time.
Thank you.
Cool. Thank you.